And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome, fellow futures and Forex traders. Today is Wednesday, December the 8th. This is the Market Forecast. I'm John Hoagland. As always, thanks for trusting me with your time. Hopefully, if you are in the markets already, you've got things going your way. But as always, it's all about the context. Risk management first and patience. Economic numbers this morning, nothing all that impactful due out 9 o'clock Central. The job openings and labor turnover survey may shed some light on what's going on with employment. And then 9:30, of course, the EIA petroleum status report for all you crude oil traders. As far as news is concerned, kind of a quiet day as far as news is concerned. I mean, we have the S&Ps eyeing all-time highs, and the Nasdaq holding a new support level as the world continues to wrestle with the new Omicron variant. Seemingly not going to be any more dangerous than Delta or any of the other strains out there. Always nerve-wracking to the markets. We saw, last week, big turnaround to the downside, and now a big turnaround back to the upside. They said in the title this morning, we're going to have to trade smart today. Of course, we have to trade smart every day. There was really not a lot of reaction in crude prices after the API announced a surprise drop in inventories by about 3 million barrels. Price is holding that 71 weekly kickoff high level so far. We're going to, of course, see that on the charts here very shortly. EIA expecting a drop of 1.7 million barrels. Of course, we'll have to be patient and make sure we keep our eyes peeled if we are trading crude oil to those numbers. A little bit of action in global central banking as Brazil and Poland raised rates. India left rates steady, and so a little bit of tightening going on globally. Meme traders are going to be watching the GameStop earnings, which are due out after the close today. So that's going to be kind of a fun one if you are one of those traders that was able to take advantage of that short squeeze that the internet traders put on some of the major players in that short. As always, make sure you hit that lucky like button. Share, comment, question, feedback, and heckling are always welcome. Taking a look at the VIX, the dollar index, and the 10-year yield this morning. VIX about steady at 21.78, very close to its settlement from yesterday. Dollar index down just a little bit, 96.19, and the yield on the 10-year back up to 1.5%, slightly higher than the close from yesterday. So, as always, we're going to be trading what we see. Sometimes markets don't tend to make a lot of sense. We got to keep track of, the things that we're seeing, and can't stress enough the importance of good risk management. You're going to be looking for opportunities to trade close to those points of invalidation so you can limit your risk and expand your potential profit target. Speaking of, we do have group coaching this afternoon at 1 p.m. Central. There is the link to register. I look forward to seeing any and all of you there. Unfortunately, the good doctor is busy. We're going to be recording the session today. It should be out on YouTube in a day or two. The doctor says he's very sorry, but We're going to have to just kind of record what we're going to be discussing, and we are going to be discussing taking stock of how you did mentally and emotionally through your trading this past year, and maybe a couple of things to look for and a couple of things to work on in the coming year in that regard. Always great to hear from the good doctor. And again, he's very sorry he's not going to be able to join us today at 3:15, but we will be recording a session and it will be on YouTube very, very soon. All right. Got to say good morning. Good morning, Zoraine. Good morning, Frederico, George, Chris. Lacey, Chris says, good morning. I can tell you there's not one squirrel in the yard this morning. She's already patrolled. Jim, good morning. Yes, profitable and educational day in the markets. It's something that we always have to kind of remember and we go through on a daily basis. There's always more to know. Nobody knows everything. I certainly don't. And, I learn from the markets on a daily basis. It's part of why I say be humble, grateful, and creative. Being creative allows us to listen to what the market is telling us. It keeps me from putting my bias in front of what I see in the marketplace. Isaac, good morning. Mo, Brody, Nico, Alfred, Drew, Andre, Bill, my brother Rick, Laura, good to see you, Mirik, Jeff, Charles, Vince, good to see you, Manuel Caesar, good morning, Brian, Trading Research. Three Lions, Deanna, Jerry is awake. Terry, good morning. Sarah, good morning. Kevin Guy, good morning. So it's a pleasure as always to see everybody. And again, appreciate you trusting me with your time. Yesterday we had some pretty good opportunities that we discussed on the market forecast. We had the opening range trade in crude oil that we watched moving to the downside, but where did it turn around? 71 even, weekly kickoff high. Those are those important levels that we talk about, that I don't really look at them as opportunities to envelop the market on a weekly or a daily basis, but they are bigger levels that I believe longer time frame traders may look to adjust inventory. And if that's the case, then price doesn't stick around there too long. Once in a while we hit one that's pretty magnetic. But yesterday that moved down after the opening range in crude oil down to 70, 90, about 10 ticks through that weekly kickoff level, and it was rejected pretty stiffly and had a pretty decent up move. We also talked about in the S&Ps yesterday that we had a gap to the upside. We had, I think, a late spike the day before, and the opening range was mentioned as an opportunity and ended up being the dead low for the day yesterday on about a 45-point range. So pretty decent opportunities there. We're going to take a look now and see what we see in these markets. I'm going to pop in there right now. All right, got the crude up. Let's take a look. All right, I should not have the echo. Should be all set for us. Let me know if I do have the echo. I think we're in good shape. All right, so let's jump in. So here is the daily in crude. Yesterday, we achieved some time acceptance above weekly kickoff level. We see that the market moved back down to in the overnight, that level again, 70.91 is our overnight low. My concern is volume. We did add a little bit of volume on this up move yesterday, but we lost 34,000 in open interest. So that it kind of indicates that we still had some shorts in the hold down here that finally capitulated and got out of those positions yesterday. So we're going to be monitoring to see if we do have longer time frame traders entering into the marketplace in either direction. So far, yesterday's regular trading hour and last night's extended trading hour session, basing buys at $71 approximately. These levels are always they're never finite. They're more like zones. So we have to also remember that we are waiting EIA information today. So volume was all right yesterday. A little concerned about the drop in open interest. I was looking to see if we could have an increase in open interest above this level. We may see that today. We don't know. Let's take a quick look here at the 30-minute chart. Okay. So yesterday we had a late spike in the crude oil. We had a gap. We had the market opening above an important inflection level. The opening range was left at the high of the session initially, which offered about a 2-to-1 reward over risk opportunity. The low yesterday in regular trading hours, 70.90. Our extended trading hour low, 70.91. Maybe I was off by about 10 ticks on this weekly kickoff level, but that's all right. Everything is a zone, remember. So when we tested down to this level here and rejected, we mentioned the fact that if we were to take out the high of the opening range, there was a pretty good potential upside opportunity there, which played out very nicely, basically to last week's high. Settlement, yesterday's settlement, 72.05. Our extended trading hour range, largely, except for, even by one tick down here, inside the range from yesterday. We don't have any overnight inventory. We don't have any gaps. We don't have any late spikes. We're basically going to be opening where the market finished yesterday, in range, in value, no urgency necessarily to try and get into a trade first thing this morning. We're going to see if we can't watch the opening range. When the market opens in range and value, I think there's a lower probability that the opening range will provide a good opportunity. I'm going to be especially with EIA yet to come out here at 9:30 Central. I'm going to be patient and I'm going to wait and see, let the market establish some early range, and I'm going to play the extremes of those ranges for my opportunities for a couple of reasons. When we open and we start to range, the market gives us reference. The high and the low of the early part of the session, known sometimes by the initial balance as the first hour of trade, can tell us where the market is comfortable or if it is not comfortable, of course. So again, today, we may not even watch that 1 minute opening range trade today. Maybe we will. I don't know. We'll see how things go here. But again, in range, in value, very little change to the perception of the value of a barrel of crude oil since the close last night. So I'm going to suggest, again, staying patient. No overnight inventory, no gaps. Our auctioneer is pandering. He's talking about how great crude oil is or how bad crude oil is, depending on your market view. So let's move on to the S&Ps, probably a much more interesting market, at least for the open today. Here's the daily, of course. So big up move yesterday. As usual, we were lacking in volume on an up move. My concern is we lost open interest. Very similar to crude oil yesterday. We had a big up move that didn't bring in new business. It executed or got rid of old business. The market's going to get rid of old business first. Now we've got the opportunity to see what the longer time frame traders are going to be, how they're going to be reacting to this. When we had that big move to the upside yesterday, I was hoping we'd see some open interest coming in back into the long side, but we didn't necessarily see that. We've got our all-time highs here. This island top here was on Thanksgiving. We're right back up to it. Let's take a look at the 30-minute. Okay. All right, hang on here. Okay, so we had the move up above weekly kickoff high here. We opened. We talked about the fact that we had a lot of overnight longs in this market. Settlement, if you remember, was pretty much right here at point of control. So we had a lot of overnight longs, but above an important inflection level. We talked about if the opening range is left at the low of the session, it could provide a decent upside opportunity, which came back and checked a previous naked point of control right here. I've cut that back now. We've got a couple more, 2 exactly, naked points of control above the market before we can start pushing to new highs. What is this market saying to us here? Well, the market is holding some overnight longs. The question is, are we going to gap open or are we not going to gap open? If we don't gap open, I'm going to try and stay patient again and look for opportunities as the day goes on. So a lot of it depends. I mean, if we start to move higher and we can open with a gap and can't close the gap, I think it's a cinch we take out these 2 visuals above the marketplace. If we do reject above yesterday's range and back in value, that's going to suggest to me to try and stay patient, let the market establish an early range, and then work the extremes of that range. Let's take a look and see what's happening with our opening range trade here in crude oil just briefly. So the opening range is the high of the session. This was last year. I think this was yesterday's opening range. Opening range is the high of the session so far. But again, by looking at this 30-minute, we're in range, we're in value. Very little change in the perception. Stay patient. Maybe wait for after the EIA petroleum status report. Nasdaq. Nasdaq is presented weaker. It took yesterday's big upside move to bring us back above an important inflection level. The weekly kickoff high in the Nasdaq is 16,323. Again, volume was just okay. I don't look for huge volume on up days. But again, we lost open interest. We did not bring in new business. We got rid of old business on this move to the upside. At least we have some kind of reference to look at here with the weekly kickoff level. We're basically trading at it relatively close to it right now. Our overnight low, very close to it right now. This is going to be somewhat pivotal for us today. 16,323 is weekly kickoff high. There is the potential for a market state change. If we accept up here and we begin to drive higher, that's going to change us from medium time frame downside activity to perhaps ranging or a new leg to the upside. It's similar to that in the S&Ps. So we're going to take a look at the 30 here. So here's our big up move, opening range again, the low of the session from yesterday, taking us to almost close above that weekly kickoff high. Settlement was 16,318. We're still kind of holding overnight longs here. I'd say that they're pretty much reconciled as we come back closer to settlement, which is right where the market traded to. Within 2 ticks of it, this low. So we've moved back to settlement. This is kind of a target-rich environment. We've got value high at the weekly kickoff level. We've got settlement. We've got yesterday's high. Kind of an interesting area here. Again, for a regular trading hour session, I think the biggest question is going to be, are we going to open with a gap or are we not going to open with a gap? I'd say the probabilities are probably not. But we don't know. We have to wait and see until we find out what happens. If we don't open with a gap, it's going to just show signs of acceptance of previous value. And I'm going to be patient, let the market play out the first hour or so, and then watch the extremes for my opportunities. Gold. Gold has really been kind of an uninteresting market. I think the most interesting market today is the euro, and we're going to see that very shortly. 7 days in balance, a glimmer of interest in the open interest. We finally added about 1,200 in open interest after very small changes in open interest for the past 2 sessions. We are still in short time frame control. We are inside balance. Balance rules are we fade the extremes of balance until there's a breakout that's accepted, and then we go with the breakout. I think we've got a little bit of space around us before we have that opportunity to see a breakout. We talk about the tennis player. When the tennis player volleys back to the other side, he runs to the center of the court so that he's prepared to run to hit the next volley back to him, if it's to the left or to the right or to the downside or to the upside. Our tennis player is centrally located in the court here, looking for what's happening next. So again, it tells us that we're in short time frame control, and we do want to stay patient. This morning on the open, there was really very little to do. We've got this trend line here, there were 3 good solid points to it. We have this trend line here, which a couple of good solid points, got a little bit below it yesterday, but rejected. Just the fact that the market isn't holding any overnight inventory, open centrally located inside yesterday's area of value, says, just try and stay patient. I believe that the opening range was left at the high of the session last I checked, but again, it's probably going to be a smaller opportunity if that's the case. And again, I'm waiting to see what the first hour of trade looks like. If we see some one-time framing activity, if we're still in range and value, try and really stay patient and look for good trade locations based on short time frame levels. If there's no headline news, if nothing changes, if nothing bad or good happens, it's going to be basically, where is the next short time frame level? Where's the best short time frame level that I can find? Let's check out the euro. I think this one's one of our more fascinating markets. So we've got market state to the downside for 2 months, 3 months now. We've got a base last week, and now we've come up and we've started to kind of create a bull flag. We were looking at this yesterday. Well, our bull flag has broken to the upside. So I think that there may be some decent upside potential if we continue to show acceptance above that trend line. We had slowing volume on this move to the downside. We had narrow ranges, contrary to the most recent market activity. We added 20,000 in open interest yesterday on low volume. There's some big potential here. Another nuance here that we are looking at is late spike. The euro put a late spike in yesterday and settled right at the high. 112.62.5 is that high. Now we've got overnight longs somewhat reconciled, new longs coming in. I don't think that we left the opening range at the low of the session, but we opened with a gap. We have been unable to close the gap relatively early. This, I think, is telling me that I'm going to be trying to find opportunities to buy this market on weakness. I don't want to buy the high, of course. We'll look for a pullback that gives me an opportunity to continue this move to the upside if it indeed does play out. It's going to be difficult to find good trade locations because the rally already seems to be on the way. We've got 1, 2, 3, 4 bars, one time framing higher. We could break that now. But I think, if we can't hold our opening or the day session low right here, we look for opportunities, perhaps down to this trend line, perhaps back to The overnight low / yesterday's high / settlement / late spike. This doesn't break until we get down below approximately 112.56. It's going to be an interesting day, I think, in the euro. Only time will tell. We're going to go back to the soap opera as the market turns. Here's the 10-year. Okay, we're kind of holding here in the overnight or in the extended trading hour session, whatever this low is, at the low end of this area of balance. Okay, we've got 1, 2, 3, 4, 5, 6, 7. Today would be day 8. If we can't hold the low of this area of balance and we accept down below it, we could see this market move lower. Okay, take a look at the overnight situation. Oh, that's net gas. Hang on. Here's the 10-year. So we had some considerable overnight longs that largely reconciled prior to the open. Okay, we've opened, we've left a slight gap. So if we can't close this gap, a move continuation to the downside, it would be in order. We've been one time framing lower since 4:30 this morning, 5 o'clock this morning, and we may be at risk of breaking that now. Our whole moving averages are now holding below price. So knowing that this is the bottom end of the area of balance we've been in, right about here, there's another bottom of it right here. We don't have any real visuals down below here until we come all the way back down to this level. So it's out of balance. It's gap rules. I'm looking for shorts until we can close that gap, if we can close that gap. And it has to be done relatively early. Now, let's look at the nat gas. Also a fascinating market. So we had our weekend gap. We talked yesterday about the momentum to the downside beginning to fall off. We lost 25,000 in open interest in the nat gas yesterday. We had a very narrow range on low volume. This is how an auction dies. It cuts off volume, open interest dies. Now we're seeing a move in the opposite direction. We were talking yesterday about the whole moving averages being largely below price on the daily chart. Also something that it can be indicative of a change in direction or a falling off of momentum. Take a look at the 30-minute chart. Okay, we have lots of overnight longs. We have a gap. If we can't close the gap relatively early, we're going to be looking for opportunities to buy weakness. Okay, so overnight longs, if we can't get down to close that gap, even with all those overnight longs, there's an underlying strength to this market. If we do get back into range, we still probably are going to be looking for opportunities to buy weakness, as we've seen on the daily chart that the downside momentum has fallen off. I'm not doing anything unless I can manage the risk, unless I can find trade location that allows me to limit my risk and look for a bigger opportunity. All right. Well, we were very efficient this morning, weren't we? We got through those charts relatively quickly. Ryan, I exited a trade on Nasdaq yesterday at market and canceled, but it closed 80 points lower than where I exited. Any idea what that could be? I'm not sure what platform you were on, Ryan, but it's something I would certainly alert our support team to. Well, electronic trading, huh? nothing's perfect, I guess, but I would certainly let our support team know about that. You just make sure that it wasn't some sort of a display error. Right, sound was good. Good. Carl, waiting for a new reset, meanwhile practicing with my practice account. Good. Carl, I'm not sure that I've seen your name before. Welcome. Glad to see you. And thanks for commenting today. If you are new to the market forecast, of course, welcome. Always looking for good opportunities. And, Ryan, let me know, was Trade Evade, thankfully, a market replay and not a live trade. Well, market replay is a little bit different. I'm not sure that we experience the same situations in the real sim market. Love Peace. Devante. Step 2 almost done. Nice job. Got a couple of new commenters here. Always happy to see that. Devante, thank you for everything. We want you to succeed. We are here for that reason. All right. So, I'm going to give everybody a little bit of, I appreciate that, Love Peace. I'm going to give everybody a little bit more time this morning. I'm going to take my deep breath. I really, really hope you guys do this with me because it's so cleansing and gets me set for the day. Johnny. Stay humble, grateful, and creative in your trading today. Again, we are looking forward to your success. I'm looking forward to seeing everybody at the group coaching today. Dan will be doing the recap today, and we'll look forward to seeing him. Don't forget about tomorrow. You got the Q&A with founder Michael Patak and Dan. So there's an opportunity at 3 o'clock tomorrow to talk to the boss. And we'll look forward to again, I'll be back tomorrow morning for the market forecast, and we'll look forward to seeing you then. I'm going to head down to the proverbial trading pit. We'll see you there in a few minutes. Get out there. Remember, grateful, patient, and creative in your trading. Have a great day. Trade well. I'll see you in the pit.